Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 26th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis here for the session. What we see here is overnight strength and price continued higher in the ES here in the daily time frame. For the most part, what we were looking for was a slingshot move into 50 half, into 21, 39 half, and 50 half. Now the recent pullback, if I grab a tool here, the recent pullback right here was trapped. They tried to see a push downward. Everybody that got in short below this low was trapped, and then you saw a slingshot move back to the previous month's close. And then yesterday morning pre-market, what we saw was price sit right there on 1921, the key level we've been pointing at the entire time. Bulls want to keep price above there. Bears want to run the stops through that zone. And what happened here was a big time rally into the close, sitting right on 1950 half, and then in overnight trading, pushing almost into our target at 1970.75. So the previous session, what I mentioned was any pullback into 1939 half could offer an opportunity to shoot for that 1970.75. And what we saw in overnight trading was just a straight push into that area, no pullback. And now we're going to see how it plays out from there. If we look at the intraday time frame, you can see how bullish this thing has been. We had our key range the previous session. This is what I mentioned to our trading room was anytime you have a major rally like you did the previous session before, like this rally here, the expectation would be for some sort of digestion to occur. And we saw much of that build out throughout most of the session. What I mentioned was this energy right here can really manifest itself into significant expansion. That expansion was seen to the upside, and we saw a continuation here into the 50% weekly PivotBoss pivot. So a very nice and solid key range here that helped us identify the levels to watch for potential expansion, and that materialized to the upside. Now if you bring this out just a little bit here, you can see with the PivotBoss pivots, what we're looking at for the most part here is the previous week's high-low close, the weekly pivot range, and then the extensions. So price pushed through the previous week's high. First here, couldn't get above and dropped downward. Held here, rallied back to the high, built up some energy, and then pushed through the 25% expansion level and into the 50% right here. So that 1967.75 is the 50% weekly expansion target on the PivotBoss pivots, smacked into it and is pulled back now, coming just shy of that 1970 key level. So what I would say is any pullback into 1950 or even into this 45, that low LBN right there, could offer an opportunity for bulls to defend that zone and then look for a continuation to the upside. Because if you look at the primary here, we still haven't reached the primary for the day, meaning that from the session's low here, we still have a projected primary upside target on the day at 73.75 with a pretty decent shot at seeing 1982 quarter. So the first pullback into somewhere in this zone where the LBNs are, we got to see where the bulls want to come in and defend for a shot at squeezing higher. Now any failure to hold above 1950 generally, or this 45 zone, could open up a rollback into 1921s where bulls are carefully defending that zone as well. So we have to watch out and see how far we pull back and see if bulls are still defending these pullbacks for a continuation higher, because we still have primary targets above. Let's take a look at crude oil. In a daily time frame here, one thing I mentioned was how price had dropped the previous session and attempted to push below the 31s, right? And when that failed to hold, we saw a significant rally and rejection back to the upside, which helped influence the market higher. So when we came on the closing report that day, what I mentioned was if you're going to reject prices below 31s, the expectation would be a slingshot move into value at 33.65. This morning, we complete that move. So a solid continuation into 33.65. This has been an area now where bears have been defending, which tells you that there are a lot of buy stops above that zone. So if price is able to push and gain acceptance beyond 33.65, that could influence a continuation into 35.75 and generally above that 35.01 VAH. So we could be looking at further strength ahead. Now failure to hold above the recent lows here, 32.80, could open up a return back to the bottom of the trading range, because that's really what we've been in this entire time, is a trading range. So now we have to see, are we going to break through the top of that range, or are we going to see rejection that leads to a reversal back down? And right now it all comes in off that 33.65 short term. But one thing is clear and apparent. You can see I have a key range that's built out here. I also have the micro composite VPOT excuse me, micro composite VPOC right here. And you can see that beautiful balanced range right now. And that's kind of what's building up right here. So the important part is prices are coiling significantly in crude oil right now. Once we break out from this range, it's going to be significant. We could see a move, easily a move of 8 to 10 points in the direction of the break, which means if we get above these 35s and hold, we could be looking at a significant rally back into the 40s. Conversely, below 30 opens up a big time move that could push this thing toward 20 and the expansion targets down below 24 and 18.14. So big time implications once we materialize out of this range, but right now we're not there. We're still building that energy, and that's important to understand. Looking at crude oil in the overnight chart here, basically we've pushed higher into that 33.65 after that significant rally. We had this downward trending channel yesterday that we were watching. Once it broke that channel, a big time release of energy was seen. We've completed that move into 33.65 now, and we have to see how the market responds from here. All right, let's take a look at the NQ. Let's go to the gold contract here first. Gold is coiling up. We have a very, very tightly coiled range here. You can see VPOC has shifted up yet again. So right now, we'll edit this to say MC VPOC right now. And then what we're going to do is copy this and make it, or duplicate it rather, and make it 1233.30. So that's going to be the new composite VPOC, and that's going to be important again because VPOC has been bid. Every time we get a composite VPOC shift, it's been bid, and that's very important. We had one shift up to here, went bid up. We had one shift up to here, went bid up. And then we had this one shift, and then now things were kind of coiling around that zone. Now we have it shift up again a little higher, and that's where we are. You can see prices just significantly coiling, trying to hold below the previous week's high. I mentioned before, if bears can defend this previous week's high, which is the current game right now, we could see a move back into 1196. Things are being complicated now by the fact that we have twin VPOCs up here, and a breakout, I would say, in either direction now can spark a big move. So above 1245 could open up a release of energy into 1260. Failure to hold above 1245 opens the door to a move into 1196 half, which I still believe is the current primary move right now. We're in this trading range, right? And we're in the upper distribution of the range. Ideally, you'd come right back down, and right now that's what's happening off this previous week's high. The thing is, if these bears don't get paid, the buy stops above 1245 will easily release energy, perhaps even to new highs. So we'll watch that out. All right, now looking at the NQ here, you can see that price has continued higher. This one was the most precise off of its key range here. Remember, we rallied off the lows here and pushed right into 42.26, exactly as we would expect off the exact reversal point we were watching. And then when price drops downward into this level, that's the midpoint of that key range, it goes significantly bid. That's bullish. So when price pulls back, the upcoming session, you're looking to defend perhaps for a continuation, and that's what happened here. And now what we were looking for was how does price respond above 42.26, because the way that we slingshot off this level and pushed through 42.26 suggested a push into the next HV and above at 42.87 and perhaps the top of the key range here at 43.09s. And you can see that's kind of what's happened here in overnight trading as price reached that next 42.87 HVN. Still, I would say that pullbacks into 42.26 offer an opportunity to defend for a push into 43.09 with a shot at even seeing a push higher. Still, this is going to be the key level to watch still, because any failure to hold above that zone would open up a move back down toward 40.85 and perhaps even lower. So this is kind of an inflection point right now. Looking at the RT chart, you can see price pushed into the 25% weekly expansion target. So we have the weekly key level here. That's the previous high. Price pushed through that zone and rallied into the 25% expansion on the weekly PivotBoss pivots, tried to get above it and then pulled back. Typically speaking, we know 25 can offer a high reversal or fade opportunity, high probability opportunity, and we're seeing that. So right now, very short term, you can see price took VPOC, overnight VPOC offered. A push into 42.79 half offers an opportunity to defend for a push into 42.47 half and perhaps all the way into 42.27 half. A return to that point offers bulls an opportunity to defend on a swing basis for a push higher. Otherwise, failure to hold that level opens up a move back into 41.59.5. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.